There's 200 banks in the world that have a $5 billion market value or more. 48 of those banks are in Europe. So, you've got 25% of those banks are in Europe. Out of that 48, 21 of those banks are in worse shape than Bank of America was at the height of the credit crisis. Here's why it's important. They are going through a severe crisis right now. They are looking at the highest non-performing loans they've ever seen. They're looking at greater asset shrinkage, means people are pulling their money out of the banks. They're looking at larger losses than they've ever experienced. They're looking at debt to asset ratios, the highest debt to equity that they've ever had. And they're bracing right now for the worst loan loss in history. That's a problem because you've got Greece headed back into crisis. This is going to spin Spain and Portugal back into crisis. You're going to have a Euro central bank that is not going to have the ability to bail out these banks if they continue to fall into crisis. And they are going to slip into a very deep recession that is going to pale in comparison to 2008 here. Nobody's talking about it. It's being ignored in great part by the U.S. and the U.S. markets. And don't think for 1 minute that it's not going to impact the big five here in the United States that have an enormous amount of assets, because remember, the only place they can get any yield on their assets is in Europe and other parts of the world that have enormous amounts of assets and bets, and I call them bets, not investments, on some things in Europe, and they are going to get hurt. And let's not forget that 27% of our market is financial sector. It's impossible for this not to have an impact on our markets.